From Orange Umbrella. Today, I want to talk to you about a rolling cash at bank or a daily cash at bank forecast. I've mentioned this idea in a few of my other videos, and I wanted to kind of run you through a worked example today. So that's exactly what I've done for you. Is I've come up with just a really simple example of what this would look like. Why have I chosen this particular tool? Well, it's very, very easy to execute. You don't need a huge amount of accountancy experience or bookkeeping knowledge. The formula that I'm using is extremely simple, and I'll show you how that all fits together as well. So let's just have a quick look at this daily cash at bank. So what I've done is I've put at the very beginning sort of just some quick headings: the date, the description, money in, money out, and a balance forecast. I've put this little type column in as well, just to aid me in understanding what type of transaction that I'm looking at as well. So this is actually a reflection of the bank, and we're forecasting forward to see and predict what is likely to come out of our bank account. Now, it's a really simple way of doing a cash forecast. We don't need fancy accountancy software in order to do it. We just have a look at our bank line on a month-to-month basis and look at which are the common transaction lines, and we translate that into a spreadsheet. So what I've done here is the starting available cash. Now note that that isn't the bank balance, and I've actually included any overdraft within that because that is part of our current available cash. Then this example here, like many businesses, we've got our first of the month transactions, our rent, our rates, we've got to pay the cleaner, our bank fees are going to go out, we've got some employee expenses, things like that. The formula I'm using is really, really simple. I take my cash at bank figure and I add on the money in and take away the money out, and it forecasts. And I've just used the fill handle. You can see this very simple formula up there, and I just use this fill handle and I just pull it down. So every single line that I now build in with money in or money out, it forecasts into the cash at bank. Now, the first thing I want to highlight your attention to here is the fact that this business example, they're going to run out of money, and that's a huge problem. Now, when we look at our cash at bank, it's all about planning and forecasting into the future, and it's immediately told us we've got a cash flow problem. So what I would suggest you do here is, as I've used this type column, we identify what I've called a flexible transaction. Now, what do I mean by flexible? And feel free to use whatever terminology you think is appropriate here. It's just something that I felt was appropriate. And what I mean by flexible is I've got ability to negotiate the payment terms, or I can delay the payment, or potentially I've got some control over the cost of it as well. So what I can do with this cash at bank is I can talk to supplier one that I've got in there and say, oh, look, I've got a bit of a cash flow problem here. Having said that, I've got my rates grant coming in, which we think will come about the 5th of April. So would it be possible if I pay you just after the 5th of April, maybe give a couple of extra days after that, just to make sure that the cash has come in? We also know, looking at our cash example here, we're expecting some direct debit money in and potentially some PDQ money from card takings as well. So let's say the supplier agrees. What we can do on our cash at bank forecast is we can just highlight that row and we can then shift that line further down. Now, when you're using your rolling cash at bank tool, what I would always suggest you do if you move something is recopy and use the fill handle back into that calculation. It sometimes messes with the formula, as we just saw there. So now what we've got is a position where the business isn't going to run out of cash. They've got cash just by moving that one payment. So it's a really good way of planning what's going to go in and out of your business. And what you can also do is, as you enter into negotiations, you can start adjusting payments and see where you stand as well. So let's use this example. Our rates bill, we might be in a fortunate position where, oh, we're getting the rates grant, and actually not only are we getting the rates grant, is we're not going to have anything due either, because a lot of small businesses aren't going to actually pay anything either. So that's great. Our cleaner potentially has only come in once or twice during the month because we've been closed, so that's going to be an adjustable bill. And as you see, it's reflecting automatically into our cash at bank figure as well. We actually might see more people pay via direct debit than we were expecting, which would be great. And I've put a 0 in there for our PDQ deposits, our card machine deposits, because we're potentially not doing any face-to-face trade. So there's no card transactions actually occurring in the business. If we actually had a few to come in, we could maybe put a figure in there as well. But we're painting a picture really nicely here of actually what's happening in the future to our bank balance. Now, like a lot of businesses, wages are paid at the end of the month. And I've created these wage example figures here. So that's suddenly, we see a big drop in our cash flow and available cash there. We can fast forward now and keep going, and we get to the end of May. Now, as you can see, I've reflected maybe lower direct debit takings, our supplier payments are continuing, and we're going to run out fully of cash at that stage. I know a lot of businesses are running out of cash a lot sooner than that, but it's just for illustrative purposes today that I'm actually just showing you how this tool can work for you. It's really effective. It's very simple to set up. It does require a little bit of time. So when we're actually using this process within our business, we have to reflect actually what's happened in the bank as well. So we look at the bank lines that have occurred on that day and we update this spreadsheet based on what has actually happened. So we need to also, let's say it's the 2nd of the month today, that I would always just fill those transactions in maybe red, just to say that they've occurred on the bank and we're actually now forecasting forward. So when you've finished updating this spreadsheet for the true transactions, that should be an exact replica of how much cash you have available in your bank account, including the overdraft. What we can try and do is play some games with this as well. Predict when customer payments are going to come in. So let's say a customer payment of £700 is going to come in because you've negotiated with that customer. It's going to reflect into it as well, so you can see what's going to happen as well. If you note down in May here, we've got no provision for any money coming in from the government for potentially staff that have been furloughed. We can add that in and see how that affects our bank balance as well. This minus figure here is particularly useful to us when we're negotiating with the bank. If we've got a true position of exactly where our business is going to stand in about a month or two down the road, we can talk to the bank in exact terms about what we need. I was talking to a bank manager last week, and he was saying to me, one of the big difficulties is people are asking for a sum of money. We ask them to reason it out and they're not able to actually give us a reason why they need that amount of money. What I would suggest in your case is take a month of figures. Bank lines are very similar each month, so that's a rough look of how a month is going to look. So we just copy those figures and then we can work on June's figures here. So obviously we'll have to change the dates. Think about the transactions a little bit, but the same principle is applying here, is that it's forecasting forward. So now if that's another month of rough predictions as well, we can see that this business by the end of June is going to be about minus £12,195. If you're able to go to your bank manager and say, by the end of June, I'm going to need some cash of £12,195, they're going to say, how did you come to that figure? And you'll be able to work them through the transactions and you'll be able to give them some real concrete information. It's also given you the opportunity to work through those fixed and flexible costs that you've got to see where we can save some money and also see what that's going to do to our bank balance as well. This is a tool that I have used in my business life and it is so effective and it's very easy for everyone to understand. When I was, but it was the last sort of credit crunch that we had, I was in a completely different industry and I was running a media agency, and myself and my technical director ran one of these and we updated it every single day, and we were always forecasting about 3 months into the future about where the bank balance was going to stand. We were having a rough time, so we were putting planned payments in there as well. We knew we had to make certain payments, but those payments were continuously in flux though, because we didn't know how much cash we were going to have. So we would just adjust those payments. We would always make sure someone would get a payment, but we might have planned £500 but find that actually we can't make that £500 payment. So if we use that rent example, but we would make sure that someone would get maybe £250. Obviously, this spreadsheet isn't keeping track of your liabilities, so you still need good financial controls within your business to keep track of all those creditors who you owe money to. And it's particularly important as well to look at that sales ledger, those invoices that you're sending out to customers as well, to find out who is going to pay, who is not going to pay, whether you can enter into some form of payment arrangement with them as well. It's going to give you knowledge in order to update these transactions as well. I hope that's been really helpful for everyone. Because I've created this on Google Drive using a Google Sheet here, it's completely shareable. I've got the share button up here. Really great when you come and work with team members, get your accountant involved with it. But if anyone wants a copy of this spreadsheet, I can just create a public link of it. It's obviously not based on any true information, it's just an example. I can share that to you so you've got a template you can just copy from. Okay, thanks very much for watching today, and I will catch up with you in the next video. Thanks.